All right, everybody, welcome back to the Cashflow Chronicles. Another great day. Let me just double check that we are connected. It says everything's connected. It took a second there. Steven, did you know that our episode 3 episodes ago was probably one of our most watched with you and Dougie Dallas?
Congratulations.
Now you know. Don't get too excited, Steven. We're back, Cashflow Chronicles, me and Mr. Patel.
This guy can't even get a sentence out.
Special guest Stephen Fiorillo. Always a good time to be hanging out with you guys. Don't make a noise about the date on the banner. Let me change that really quick. It is January 27th, 2025. Always a great day to be with everybody. Contemplate subscribing. It's completely free, and becoming a member just to support the channel.
Yeah, definitely support the channel because we need to get Steven a new camera. I'm sorry, Steven. You're using some freaking 1999 Logitech webcam, and we need to stop this. You are a professional content creator.
How did you know I'm using a Logitech?
I figured you were going to use some old school.
He's like, oh, let me go to Staples really quick and get the cheapest camera that I can get because I'm frugal and I'm trying to save for God knows what.
So if you don't get yourself a better camera, I'm going to send you one. All right.
No, just send me a link of what to buy.
Okay, I'll do that. I'll hook you up. And then trust me, I'll do. You don't even need to get like a really, really nice DSLR or anything that's. I mean, a used DSLR with like a bunch of shutters. Like I got mine off of Upwork or not Upwork, something, but it was really good. It's a really good camera, and you're using it for streaming, so it's.
I need
it's
something
really
I can put on top of my monitor. So
I got you.
Timo.
I'll get you all the equipment.
$239, believe it or not. Amazon hanging out at all-time highs, $236. Bros, $62.50. Google trying to continue above $200, $197.94. Palantir hanging above 80. Hopefully it's going to zero on Monday. SPY 604. The Qs 523. Bitcoin back above 104,000. Oil coming back down from its recent highs of $80. And Henry Hub also coming down from its recent highs of $4. Gentlemen, where do we start? It's an eventful day.
I got something to get off my chest.
Do it, Steven. Get it off your chest.
And I need you guys to talk some sense into me because this does not make sense. Tesla should be down $100 right now, if not more.
You just started the stream by throwing a bomb, bro. Come on.
Okay, 150, maybe not that far, but this should be down triple digits, not double digits. This was a horrible print, and like I said privately on the phone to several people, what I said was going to happen happened. Earnings were going to be bad. He was going to come out and have sunshine and roses on the conference call, and it was going to get bid up. These numbers are depressing, and it's just I can't win with this company because
I spoke about this on Amit's stream a couple of times. I said, look, you're seeing clear issues around auto sales. A majority of the sales that are coming to Tesla are coming from the auto sales. So technically it should be valued closer to an auto company than anything else. Like you look at the revenues, right? I'm glad you pulled it up. Who pulled it up? Matt, you pulled it up? Yeah. Okay, so first and foremost, look at that auto revenue segment. It's literally down year over year by 8%, right? Gross profits are down. Income from operations is down. Operating margin is down, but if you got the CEO telling you that this is going to be the most valuable company on the planet, people are going to buy. And so Elon knows his investor base, and so he's really pushing them hard. And so a lot of the people in the afternoon, they're buying, man, which is fine. Like if he wants to sell the idea that we're transitioning to a robotics company to what is it called? Like an automotive ride sharing company, like autonomous ride sharing company, that's fine. That's his prerogative to sell the idea. The thing is, though, we are more value investor. Like we're not value investors per se, because there are times where we do go out of our realm, but we actually look at the numbers, and the numbers are actually showing you that this is a deteriorating business. You know?
So yeah, I'm going to expand on what you just said, and I do believe that Tesla has the potential to become the largest company in the world 10 or 15 years from now. I've been saying that since I went from bearish to bullish and became a shareholder. And I always said I'm becoming a shareholder for the future, not now. Yeah. But this is horrible. And what people need to realize is They keep diluting shareholders. If you go to slide 33, they show you the shares used in the EPS calculation, and it keeps going up because they keep issuing shares. These numbers don't go up without issuing shares. They just don't.
Which is surprising because they have $30-odd billion in cash.
They love to dilute shareholders, and now the EPS has gone down so much that the valuation, once again, does not make sense. And there is no guarantee that we're going to get FSD revenue or Optimus revenue this year or next year to offset any of this. This is a growth company that doesn't grow. It doesn't make sense at this valuation, and I cannot believe it's getting bid up. Like, this is crazy.
It's fine. I mean, look, people have the right to invest in what they think is going to be the next big thing. All right. So that's totally fine. I'm not against that. The thing is, for guys like us and investors like us, where we actually do look at the numbers and say, okay, is the business, how is the business doing? This is not something that gives us a lot of appetite to buy at these prices, especially. My biggest thing is I was watching, technically I was like falling in and out of sleep because I haven't slept really that well. I was listening to Amit's stream where he had Amir and Couch Investor on. And one of the questions that they asked was actually a very good question to ask, which was, why don't they break down FSD revenue in their numbers? And the thing is, to me, I'm looking at this and I'm like, the reason why they're not breaking it out is because it's not that great. It's not as lucrative as people are thinking, and now when you consider the cost of upgrading all this hardware that supposedly Elon is saying, bro, that's gonna hurt. I don't know how they're gonna be able to do
Chris,
it. And
isn't that part of services?
I think so. I think it.
I always think it's part of services, not automotive revenue. I don't know.
Might be under services.
Give me 1 second, guys. Yeah, sorry.
Yeah. No, I think it's under services. But look, the bottom line is, and I said this to Amit on the phone before. So right now, Tesla has done, what was their net income for the year?
That's net cash, net income, 2 point. No, that's
Damn.
for.
There's a plane that just crashed into the Potomac.
Oh,
like a commercial plane. Yeah.
So net income on a GAAP basis was 7.09 billion. Okay. What's the market cap right now? Trillion?
Sorry.
It's more.
I got distracted. What Chris said. I think $1 trillion.
A private jet.
There's 3.5 billion shares times 400. So 1.25 trillion.
All right. 1.25 trillion. And they're doing just over 7 billion in net income. So now and go with me on this. Let's say you get Optimus up and going this year in FSD and you really start ramping the next 2 years. Let's just hypothetically say by 2030, which is 5 years away, they go from 7 billion to 70 billion in net income. What is this company going to be valued at, considering there are 3 companies that already do 70 billion in net income, and there's about to be 4 this year that do 70 billion in net income, and none of them are valued at over $4 trillion.
Yeah. So I'm assuming you're saying Microsoft, Apple, NVDA. No, not even NVIDIA yet. You're saying Google, right now, Microsoft.
Yes. So, I mean, it makes me crazy seeing that people are pricing in so much growth. And if this company actually gets to 70 billion in pure profit, this thing's going to have like a 15 or 20 trillion dollar valuation, which is ridiculous considering that we're already there with companies and the biggest valuation is 3.6 trillion. It's crazy talk.
Let's just say it's a really hard sell, to see that these kinds of like net income shrinkage and at the same time the valuation being as high it is. I mean, what is the PE now? 200?
It's like
178. Yeah.
Jeez.
Which, to me, as somebody that actually wants to get into the company, it sucks because I'm with Steven. I think in the future, if these guys actually fulfill what they've done I think people think because I work in the oil industry that I'm a bear on Tesla. I think what they've done is actually phenomenal, and they've changed the auto industry. I can't say that enough. I've said that on multiple Cashflow Chronicles streams. I've said that on many other streams. but I don't own the stock. And the reason is for reasons like this. It's hard to justify swallowing a price to earnings of 178. And I've seen this time and time again. And I told Steven right before we got on, I've been wrong, but it's hard to justify 178x price to earnings ratio, a $1.25 trillion market cap, and without actually seeing those revenues coming through, without actually seeing that net income come through. I'm not expecting it to be valued at a price to earnings of 10, but I can't sit there and stomach and say, I'm going to pay a price to earnings of 178 and, not necessarily know when the value is actually going to show up.
Why would anybody rather buy Tesla today than NVIDIA or Amazon? I mean, look at Microsoft's print. Microsoft's print was great, and it's down. Doesn't deserve to be down right now.
One of the rules that I think a lot of people should adopt for their portfolio, and this is subjective, so if you don't want to, that's fine. When you're looking at the company itself that you're investing in, look at the S&P 500. Can this company beat the S&P 500 returns? If it can't, don't be in it. I don't think Tesla could beat the S&P 500 for the next 5 years. Now, why do I say that? Because if you look at the valuation in 2021, what it was like, it was around the same kind of like price. Like it was even more ridiculous than it is today. So what happened? You basically, if you bought during that time in the, 400, 500s, can you bring up the chart on Tesla for since 2021, like the max on it?
You see it?
Do the max on it. Yeah. So you can see if you bought in the highs in 2021, you're basically flat for the last, 4 years, where everything else in the market has run double, So the thing is, this is where you have to distance yourself from, hey, is this a great company with a great product? Yeah, absolutely. I agree with that. I'm not disagreeing with that. But the valuations that you guys are willing to pay for it is just ridiculous, And then at the same time, right now, a lot of people are like, I get it. And one of the people in the chat really respect your Rango. You say, instead of putting arbitrary net income, please do the math, cost of goods to produce a robo-taxi, money per ride, number of rides per day, per fleet size, can get to 1 trillion in revenue conservative. Based on what? You have nothing to compare against.
Let me take that one, please. So if you look at the global taxi market, and I can actually pull it up because I have it, I think in my last Tesla article, the global taxi market isn't even bigger than $400 billion. I want to know where all this ride sharing revenue is coming from. Don't worry, I'm getting the chart.
And that's without the competition, because you think that they're the only ones in the game? Waymo is already launching. They just said they're going to launch in 10 cities. They've already got commercial operations going. And now you've got Zoox in Vegas. You've got all these autonomous car companies trying to do the same thing. So the real question here is, yes, if you were the first market mover, you had the first advantage, you had revenues that are coming out right now, you could actually quantify some of it. I could justify maybe the valuation here. But honestly, looking at the robo-taxi thing is probably, it's still, in my opinion, 5 to 6 years out from becoming a real moneymaker, in which case I'm not going to pay for 5 years prices today, and then at the same
idea. The market size is under 300 billion for 2024. It's expected to get just over 400 billion in 2029 for all taxis, from Uber to Lyft to Yellow Cab to Didi. Global. This isn't US. This is global. Okay. Yeah. The idea that Tesla ride sharing is going to take 100% of the market and people actually think it's going to get to $1 trillion is crazy. Not everybody is getting rid of their cars. I'm sorry, that's not happening. Some people aren't going to be comfortable with autonomous driving them around for quite some time.
Steven, are you going to take it into the city every day?
When autonomous finally comes out, and after 6 months to 12 months of data, and if they really do show that it'll work in New York City, I will buy a Tesla and I will use it to drive me around. I'm sure as hell not letting it go pick people up and drive them around, because I got news for you. I know insurance pretty well, okay? You're going to have very serious problems with underwriting these policies, because if the Tesla vehicle gets into an accident when it's on autopilot, who is responsible? That's one. Two, you also have to make sure that your insurance policy is going to underwrite you, allowing it to use autopilot. There's a lot of things to really look at with this. This isn't a slam dunk.
What do you think about all of Ranga's comments? Because he is a Tesla employee, and he is one of the few people that Amit brings on with respect to giving kind of expert advice.
Okay, so it's low cost. It's going to cut the floor out from Uber and these other companies, which means the overall revenue from the market also goes down. Because if an Uber ride is 50 and their ride is 30 and people choose that over, you're not expanding the market. People aren't just taking these rides just to take their rides. They need a purpose for it. So you can't expect the market to grow just because Tesla's getting involved. So you want to talk about shrinkage in price. Well, that means shrinkage in overall revenue for all the companies.
Margin compression too.
So it doesn't work.
So I did set up a poll before we actually started chatting about this. So we have 60 votes at the moment. My question to the chat was, should Tesla be tanking? Now, if anybody wants to give this last minute votes, we're getting a few last minute votes in here. 64 people have now voted. Should Tesla be tanking? 56% of the chat says yes. 44% says no. So it seems like the chat agrees with you. But
not really, because it's pretty much even.
Yeah,
no, it's okay. No, more. Listen, Tesla is a company that you have to love. You have to root for it because it is an American car company. Elon is doing crazy things that I think are amazing. They're really pushing the boundaries when it comes to different technologies. But at the same time, as an investor, I have to take my hat off and say to myself, is this something that I'm willing to put money on? And to be honest, no, and I wouldn't feel I wouldn't feel comfortable at buying this at 400. If at 150, maybe.
I got in at an average share price, I think, of 177, and after my covered calls, I think my average share price got written down to like 148 or 152, something like that. I would buy more in that area. There is a 0% chance I buy more here, considering if you look at NVIDIA, and I mean, you look at what Zuck said and then Nadella said tonight, there's no way NVIDIA is not crushing and going to continue to crush over the next couple of quarters. But you're paying 43 times 2024 earnings for NVIDIA and 29 times next year's earnings. And NVIDIA has the potential, based on a 53% profit margin, to generate more net income than Apple in 2025. It is insane that Tesla has 7x the PE. It's crazy.
So what do you think of NVIDIA being down? Well, I'm going to say this. Then, if you want to pivot back to this, Chris, you can. What do you think of NVIDIA being down? Today and a little bit after hours, based off what Microsoft said. And Chris, feel free to finish your point before we move on to that.
Yeah, it's just when you look at the commentary around, they're going to try to figure out how to do more things efficiently. People are thinking that, these chips are not necessarily going to be bought up at the same level that people are expecting, which in my opinion is fine. I totally think it's normal. I think Dan Niles basically said it right. He's like, we're going to have to go through a period of digestion for AI hardware, where there is a period of time where people are just going to say, look, we're not going to buy a crap ton more hardware that we may not technically need right now. That doesn't mean the future growth we're not going to need it. It just means that right now they might be okay with what they have. So I think that is what's causing people to reevaluate the NVIDIA thesis. But then again, the one thing I'll remind everyone is that this company generates so much free cash flow, and they're doing share buybacks. They're buying back so many shares. So even if your market cap stays at 3 trillion, but you buy back 10% of your company, your earnings are going to grow like crazy. So just keep that in mind. So if you really are a long-term investor, this is not a bad time to, believe it or not, and I don't necessarily like saying this, but this is not a bad time to be selling puts on this thing, make some income that way, and then buying some really long dated calls on this thing, so that once this digestion period ends, you could do really well on the share price. Because like I said, they are generating a lot of capital and they're basically buying back all of those shares. Crazy amounts of share count reduction right now. Let me bring that up actually and just show people.
Yeah, so NVIDIA generated $16.9 billion in free cash flow last quarter, and they repurchased $12.5 billion worth of shares. I mean, this company,
and it's accelerating and accelerating.
Yeah, it is still growing.
Yeah.
Steven, are you going to sell them?
I bought more NVIDIA on Monday during the crash.
I know you did NVIDIA. Sorry, I meant to go back to Tesla. Did you sell? Or are you going to sell your Tesla?
No, because I don't. If Tesla goes to 150, I could care less. Like, I'm not selling and paying taxes on it. I don't need the money right now. This is a long-term investment.
So going back to NVIDIA then. Sorry, I'm switching back and forth and back and forth. Yes, I see the acceleration piece of it. Does it scare you that you feel like Microsoft and others are starting to pull back in 2026 revenue spend, or do you think that they're just the front runners and the other folks will be chasing them, so revenues will still likely increase?
I don't know how many people are really going to be chasing them, but I'm not worried about the revenue only because they're going to have a very big year this year. Yeah. And okay, Microsoft $80 billion in their 2025 CapEx number. If they decrease to $60 billion the next year or $50 billion, does it really matter?
Yeah.
At that point,
no. The key thing, in my opinion, to look at this operating cash flow number. Look at the amount of look at this operating cash, $60 billion in operating cash flow on a 12-month trailing basis, and they're still growing. On top of it, what are they doing with their cash? They're buying back shares. They're buying literally over the last 12 months, they bought back $34 billion in shares.
And it's just getting bigger.
$billion in shares. There's not a lot of places where these guys can park their money anymore. So what are they doing with that money? They're reinvesting it in small businesses that could end up, growing. So they're literally becoming almost like a VC fund, and they still have more cash on the side. So they're taking that additional cash and buying back shares. I mean, look at the pace of this share buyback program. I mean, and so if you look at the share count right here, outstanding shares, where did it go? Diluted. Look at this. Literally, this is over the last few months. It went from 24 billion shares outstanding to now, 20? So it went from 25.2 billion to now 24.86 billion.
At least they're starting to move it.
Dude, I'm telling you, this thing, they're going to keep buying back shares like crazy. And once they keep buying back these shares, it's nuts. It's nuts.
And don't forget, we are in an arms race. What happened on Monday could be the best thing that happened to this market. And when I say market, I mean the AI market, especially for NVIDIA, because now the U.S. companies have to put their pedal to the metal because we can't let China win. We're going to do everything we can. This is going to be crazy.
Look at this ROE, man. Return
on capital, dude. Holy.
That's freaking nuts, man.
I've never seen anything higher than that.
And yet people are paying 29 times 2025 earnings for this company and 172 times for Tesla. Like, what do we do?
If you're bullish on Tesla, buy NVIDIA, because all of their cars use NVIDIA GPUs. All the data centers use NVIDIA GPUs, right? So if you're super bullish on Tesla and autonomous cars, stop looking at the autonomous car. Look at the shit that's in the autonomous car, because without the NVIDIA chips in there, Tesla couldn't do any of the stuff that they're doing anyway. So if you're bullish on Tesla, just buy NVIDIA and get the return without the risk.
And don't forget, it's not just data centers with NVIDIA at this point. When you really start talking about if Tesla's going to make it or not with robots and FSD, you're going to need a lot more of these chips for quite some time for the entire market. Like, I don't know. Amazon is going to be the first $1 trillion revenue company, and people aren't even getting excited about Amazon yet. They're trading at a great valuation.
They are. We can get to that next. So what do you think about the revenue growth? So obviously we're about to close out the 2025 year for NVIDIA. They always kind of report a year ahead. So they're going to close out at about 129. Do you honestly think they're going to grow 52% over the next 12 months for revenue? And that would equate to about a 50% increase in EPS, meaning a 29. You said it earlier, Steven, so I just want to reiterate it. A 29x price to earnings for the next 12 months.
I do. I really do. I really think that this is a company that's going to grow a lot. And when you do the numbers, Go back to the revenue, because right now they have a 53% profit margin. They are on the bubble of generating $100 billion of net income this year. I mean, and there's 60 analysts. Like, I don't go out past another 2 years. There's 60 analysts projecting that, and then 41 the following year. So if these analysts are right, you got $100 billion in net income coming in this year, and then probably 120-ish the following year if margins don't change. This is going to be a rocket ship, or it should be a rocket ship for the next year and a half or so, because we haven't even begun to see Blackwell revenue.
Yeah.
It's just crazy.
100%.
Yeah. Same thing if you're bullish on robot. By the way, Rango, thank you for clarifying. I did not know that Tesla does not use NVIDIA for inference. Didn't know that. I thought they did, but
okay.
Yeah. All right. One of the what was the title of this? Cashflow Chronicles, MSTS fall.
Just Tesla, Microsoft. Yeah, we can talk about anything.
We talked about Meta for like a hot second, considering they slaughtered earnings.
I didn't read it actually.
Dude, that one came out and was like, "Yeah, you think that's cool? Check this out."
Believe it or not, that's the one you want to be in. Meta. I feel stupid for not putting more money on Meta, man. Because the thing is, like, the mutual fund that I have for like literally for most of my wealth has like 16% is Meta. So I'm like, I don't really need more exposure to Meta. Like, I don't want to, bro, I was so wrong. I should have goddamn bought more Meta, man. Shit.
Meta is so incredible. And I'm so happy for them because it's such an incredible company. And the fact that they came out today with this big, I mean, they generate $8 a share this quarter. Like, incredible. Yeah. Incredible.
Any particular slide you want me to pull up, Steven?
No. The whole thing.
Dude, there's nothing there's not a single slide in there that isn't impressive. Not a single one.
You know what? I'm going to pull out one number that Zucks.
Okay.
So I did hear a little bit. I was in and out of meetings when Amit was going through this earnings towards the end of the day. And the one number that stood out to me, I think, was either the third or fourth sentence that Zuckerberg said. 3.3 billion people use at least one of our applications a day. Yeah, that is almost half. I mean, I'd say 45% of the world's population. But can you imagine how much opportunity that continues to have, especially with Threads being in its infancy and many other products that have yet to be fully monetized?
WhatsApp is barely monetized.
Yep.
I mean, you have, Matt said it, took the words out of my mouth because I've been saying that for years.
And Zuck is still making sure that he's keeping his employee headcount in check and utilizing all that additional free cash. I mean, all that additional operating income for share buybacks. Look at the amount of share buybacks these guys do.
So the 8 and 9 are really big because you look at their EPS this quarter, off the charts. Okay, off the charts, and then you look at their CapEx in 2024. Off the charts. They keep spending more, yet they keep making more. That's exactly what you want to see.
Yeah.
It's incredible.
$14 per person. That's pretty insane. I thought that was pretty insane. And that's for just the quarter, right? So it's like it's pretty wild. Would they talk a little bit about buybacks at all in this?
And Matt, go to 15. You're on 15. So more cash from operations than any other quarter in their history. They're spending more on CapEx. I mean, and they're still doing $13 billion in free cash flow in a 3-month period.
That's almost $50 billion in free cash.
It's incredible.
That's insanity.
And where's their competition? Who's their competition?
Dude,
everybody's
whatever competition comes across, these guys always just come in and just freaking copy their shit anyway.
And it gets you to think, right? So like this thing is producing $50-odd billion in free cash, right? We're not talking about cash flow from operations, all cash. We're talking free cash. Yep. And this is trading at, let's just say
1.7 now.
1.7, so $500 or so billion more than Tesla, and this thing is printing out way more cash and growing.
And don't forget, about 6 months ago, Tesla was a bigger company than Meta.
Yeah.
By market cap. And I was saying that for a long time. I put it in multiple articles that when you look at the two and the numbers, it doesn't make any sense why anybody would want to own Tesla over Meta when you look at the profitability growth.
Yeah. You know what, though? Because of Meta, I'm actually even more bullish on Google.
Oh, so bullish.
Dude, bullish. Google is going to absolutely destroy earnings. You could already tell because of
don't tell them, Chris. Why you keep telling them?
Because
I was cool. I was so happy when you were there. I was happy when you were there.
I have a position. I don't care. I don't care about you, Matt.
Everyone hated it, and I was able to pick it up. And I was writing my cash secured puts, and I was printing fucking money. Now everyone's trying to get involved. I don't care about you,
Matt. I care about my portfolio and the viewers, bro. All of y'all buy some. There's one company that everyone should be buying hand over fist right now is freaking Google, man.
Yeah, man.
So IBM had a massive print today. Yeah. I don't know why I didn't take my own advice because I've been writing about that company for the past year and a half. Everybody remember freaking nuts. This company's at 248 after hours, all-time highs.
Yeah.
If IBM came out with this type of print, I mean, they demolished EPS. Alphabet's going to destroy EPS. I got that feeling.
The other thing that Azure weakness, did you guys see that?
Yeah, I actually read through the entire Microsoft thing. I thought it was a phenomenal print.
Yeah. Well, the thing is, Azure
to
me. Yeah, but see, that's the thing. My thinking is who's gaining market share. Because if you look at the GCP has been, look at this right here.
Do you have it? I'm trying to get it open.
Yeah, give me 1 second.
As you look at how much Google Cloud grew last quarter, it was the biggest growth rate out of the big
35. It was 35% year over year.
So I would think that they picked up a bunch of customers or got a bunch of expansion.
Hold on 1 second, guys. Let me just pull it up.
If you have a better slide, then
I think, I have a better slide for this one. Okay. 1 second. One thing that sucks is I have to log into my my business account because I have like all these. The one thing that I like is that, and thank you for everyone who's in the Patreon, because the thing is they gave me the ability to buy these subscriptions to some of these.
I'm just trying to get rich enough where I can buy like a Bloomberg terminal and just.
Dude, you know how expensive those things are? I would love to get one of those.
I if I had the YouTube revenue and just like if we had the Cashflow Chronicles revenue, it would make things so much easier.
One day, brother. One day. Okay. This is revenue by segment for Google. Okay. So this is like everything. So let's strip out pretty much everything like YouTube ads and stuff. All I want to see is Google Cloud. So let's just strip everything else out. God damn it. Go subscriptions, Google, and there. This is Google Network, Google Cloud. This is Google Cloud. Okay. In 2020, they were generating 8.92 billion in revenue. Okay. Now they're generating 40 billion in 4 years. Okay. Look at the ROI on that. Now, if you look at on an income segment, their biggest loser, one of their biggest losers was Google Cloud. Look at that reversal. They're generating almost $5 billion a year right now in Google Cloud. And this thing is just trending higher and higher. Their growth rate in cloud is freaking spectacular. And then you look at the margins, like the operating margins, they're growing at a really, really fast pace for their cloud segment. And you know what? One of the reasons why Azure is getting weakened while Google is actually growing is because Google owns all of their AI stuff. So all of their AI stuff they're incorporating into their products, which are tons of companies use Google as enterprise. So now all of a sudden, Google is generating a crap ton of money. They own their own TPUs, which is another thing, because unlike the other hyperscalers who have to go to NVIDIA, these guys use a lot of their own stuff. So their margins are constantly expanding. Yeah, and so Nick Knack says it right. Google profitability chart is a thing of beauty.
Absolutely.
It's crazy.
But I will defend Microsoft in one area. And that's actually the only I think it's the only Mag 7 stock I don't own. My wife may own it. I may be a shareholder by proxy. I would have to look. But
Yeah.
look, this was a great quarter by them. They don't deserve to be down. 12.2% year-over-year growth overall in revenue. Even though Azure slowed a little bit, they still generate 25.5 billion in intelligent cloud. I mean, this is just, it is incredible what they are doing in the street selling this off, yet Tesla's up. Get out of here.
Yeah. No, I'm very curious. I mean, this is keep in mind a quarter or so old, but this is basically an article by a really intelligent author called Matt Farley on Seeking Alpha, and he basically was just talking about how there's a steady third place person in GCP, right? And Amazon's
There's nobody else. It's just those three.
Yeah, just those three. I mean, Alibaba's got a little bit, but it's still declining. Everyone else is still declining, except maybe Oracle. Maybe you could put a trend line through that. But to me, until you break 5%, but Google has gone from steady over the past 5-6 years, being 7% to north of 10%, but everyone else.
Dude, I am it's crazy that you pulled that up because that's exactly what I just pulled up. I wasn't looking at the thing. Yeah, it's nuts.
Yeah. And Matt, you got to remember, it's unfair to even mention Alibaba because nobody in the US is going to use Baba Cloud.
Yeah.
By the way, that's an old chart. Here's the actual updated chart.
I'd love to see the new one. Yeah.
This is going to freak you out. Look at this. Look at where Google is. Look at where Microsoft is. Right. Amazon is keeping its lead, keeping it steady. Microsoft is kind of like going in the right trend. It's coming down slightly. Look at Google.
Yeah.
There you go. So.
Yeah. And then the other thing I wanted to share about this Google one is we were kind of talking about where.
And remember, Alphabet is able to do something that Microsoft and Amazon can't, and that is give a ton of credits to businesses that utilize Google Cloud for their advertising services. And sure, Microsoft and Amazon have advertising too. Yeah, not like Alphabet. There's two places if you're running a business. Is Google going to outperform Tesla? They should, but they're probably not going to because everybody is drinking hopium, as Matt would say.
Hopium. I need to finish my article on that one, Steve.
Yeah, but Alphabet is able to give a ton of credits for their advertising. The only two places businesses are advertised to get the highest ROI is through Meta and Alphabet. That's it.
The one thing I did want to reiterate, and I want to say that this always comes back in January of the past few years, is buybacks. And so keep in mind, this went down because this was only half the year of 2024 at the time of writing this article. But you can just see the steady increase of share buybacks from Google. And not only that, but the better piece of it is look at Chris was trying to talk about the NVIDIA buybacks. This literally went from 15 billion shares to, and keep in mind, this is probably below 12 billion at this point because now we've got 2 more quarters worth of buybacks. But we'll see when this shows up. I mean, you're talking about literally 20%. And keep in mind, the amount, if you think about, I actually put it in the article, if anybody's curious, the amount of actual money that they put out in the world in terms of buying back shares is still 20%, offsetting 20% of the shares outstanding, but they're still giving a crap ton of shares to employees. So they're able to retain some of the best talent and utilize still some of that huge net income that they have to be able to provide and get themselves still some of the best talent in the world. And I think that's
because look at this real quick. 1 second, right here. So can you guys see my screen?
Yeah.
Okay. One of the things, if you look at their segments that they're basically paying, their R&D, they don't go cheap on. They've been spending money on R&D and growing their R&D budgets, right? On the other hand, if you look at sales and marketing, it's pretty much flat since the last 2 years. Look at this. It went from 26 billion to 28 billion, 2 billion in additional expenses on sales and marketing. On general and administrative is actually going down. And they just laid off a shit ton of middle managers. Bro, in terms of efficiency, Google is just going on another level. Imagine right now, your revenue is growing up. Your operating incomes are going up. All the money that you are making is going up, but at the same time, your costs are going down. What do you think is going to happen to your margins? It's
hopefully explode.
Bro, they are exploding. Look, if you just look at the ratios right now for them, right? Give me just 1 second. I hope my internet didn't go out.
Might have.
Usually it doesn't slow this slowly.
But I do want to circle back up whenever we're finished about Alphabet. I want to circle back to Amazon again.
Yeah, if you look at what do you call it? Google's ROE, consistent 30%. Now it's going up. It's literally at 32% year over year on their return on equity, return on invested
Keeping in
capital
mind in
is
2020,
21%.
2021, it was skyrocketing because everyone was at home watching YouTube 24/7 because they weren't in the office.
Yeah. I mean, and even from an income, look at this revenue growth. Look at that reacceleration in revenue from 284 billion to now 339 billion. And what did you do in terms of your expenses? You kept them flat, and if not flat, lower. So your operating margins, look at this, 32% in operating margins, all-time highs. And yet the stock price is still at a freaking low multiple because of this whole thing with Google's going to get broken up or search is going to get disrupted by AI. But you look at their search revenues, they've gone up. Their search revenues have gone up after almost 3 years of ChatGPT been around. Google search is still up.
Yep. So we're looking at now about $9 in EPS next year. I think that's light. Because you think about how much shares you're already buying back, how much revenue growth you're going to have. You mean to tell me you're only going to get 13% year over year revenue growth?
What is that for? Who's that for?
This is for Google. And
Google? No,
at the moment, a forward PE of 22. I just think that's super light.
I think that analysts are getting that completely wrong. If that's not 20%, it's at least 20 to 30% earnings growth. Yeah. These are sandbag numbers. My estimates is by 2026, the end of 2026, they're going to do about $11 in income, right? Which is not, believe it or not, it's pretty conservative. $11 with a 25% with a 25 PE, $275. So you got $275 right now on the table for these guys. So if you think about what you're paying right now, what is it, like 200?
Yep.
That's a 30% CAGR year over year for 2 years, roughly. Yeah. Which beats the S&P 500, especially if you consider the S&P 500 trading at a 22 PE. I don't
know if it's 30%. That seems high, actually.
What is?
275. So 75. Let's see. 75 divided by 200 is 37.5. Straight line. So it'd be like 17, 20%. Maybe it's slightly less than 17%.
Okay, let's see. 200 times.
I'm not good with math, but
23.
Yeah, and the tiny dividend, which
you're right.
I mean, which I would love. That one of my things now. So back in the day when I used to be a dividend investor, little soliloquy here, monologue. The thing that I used to do is it's like I need to get enough shares where I'm getting a share per quarter in dividends. So I'm at like half a share per quarter in dividends for Google. So that just means I need to double my position, because if I'm getting a share per quarter in dividends from Google and just reinvesting that and getting 4 additional shares a year just by owning the stock, that would get me fired up. That would get me really fired up. So more of the story is I just need to increase my position in Google. Anyway.
Yeah, man. I'm looking forward to earnings, dude. I think they blow it out, and they're not getting the AI valuation bump that all the other hyperscalers are getting. I think that they're going to absolutely kill it. So we'll see what happens.
Steven, how much, not how much, but are you a big Amazon bull? I know you are. You write about them, but I'm not sure. Comparatively to Google, where do they stack in your portfolio? About comparable? Is one much larger than the other?
I think we own more Amazon than Alphabet. Not by much. I would think maybe 5 or 10% more Amazon than Alphabet at this point. But
so it's comparable.
It's comparable. I mean, look, Meta is the biggest out of all of them, obviously. But
just because it's grown so much?
Yeah, I mean, we were very early on that. But look,
Steven Fiorillo money, man.
Amazon is going to be incredible. You're starting to see margin compression. I do think the price of oil is coming down, which is going to help Amazon tremendously from cost of goods to input costs, and you're in a position where they are going. What is the news cycle going to be in 2029 when they break $1 trillion of revenue? First company ever. Especially if they increase margins. I mean, it's going to be very interesting to see what happens.
Chris,
all right, boys.
How much Amazon do you have a lot or not really?
I have a good amount of Amazon, but I have it through spreads. They're already in the money, so I just got to wait until they basically price fully. You know.
There you go. Before we head out, I do want to give another shout out to Steven. I just want to congratulate Steven. Steven, I don't think you were expecting this, but guess how many followers Steven has on Seeking Alpha, Chris?
10,000?
Come on, bro. 10?
I don't know. I don't check. I don't watch it. I don't look at his thing. I have the real person. I don't need to go to Seeking Alpha.
Do you know who you're talking to across the screen from you?
All right, come on, Steven. So how many people you got? How many people you got?
Oh, Matt's the one looking. I didn't say anything.
35,000 people follow Steven on Seeking Alpha.
Really? Damn, yeah. Steven.
And I want to give something a shout out because a lot of people don't follow this one, but I think it's one of Steven's best series. Mm-hmm. So I put Steven's link in the chat for anybody that has Seeking Alpha. Please support our friend Steven. But the one thing that I want to point out, and Steven talks about this quite a bit, we chat about it off and on the phone every once in a while, is this dividend series. Steven, you correct me if I'm wrong here. You put $100 a week into this, and you've been keeping track of it for like 4 or 5 years now, and you're pretty much telling people of the $100 invested, this is how much you're breaking out and getting dividends every single year. Do you want to give us a little bit of
you can show the article. I have all the charts in there. I mean, I go through it every week, how much income is generated each week. And look, I started the series only because there were so many people that were saying you can't make your money work for you unless you have a tremendous amount of seed cap. I'm like, well, that's not right. And you can start from zero. And that's what I did. I just keep track of it. And it's actually pretty interesting. It's actually the most fun I have every week is figuring out what the hell I'm going to invest in and tracking it and writing this series. I'm excited to see where it's going to be in 10 years from now. And get off of that chart, Matt. There's some pretty cool charts throughout the series, throughout the article. And I mean, I go through a lot of detail in it, but the table probably close to the end where I show, not that one, keep going down, the top 10, how much dividend income each one's has generated and how the positions have grown through reinvesting the dividends. One more down.
No, that's one there.
That one. I mean, I give a lot of data in this, and I give every buy real time, every dividend that's generated. But you look at Altria Group, 19.89% of the initial investment has been generated through dividends.
Nice.
I mean, and look, to some it's a lot of money, to some it's not a lot of money, but I'm not veering away. It's been very hard to not increase the weekly investments, even through the macroeconomic headwinds of 2022. But, I kept it $100 a week and it's doing really well. I mean, look, the bottom line is people thought this was a bad idea. And okay, cool. It's generating $1,954 in forward dividend income. It's up over $5,000 in capital appreciation. It's doing everything I want to do. Like, this portfolio is not set up to beat the market. Its investment goals are to generate reoccurring income. There's dividend income generated every week, and to mitigate downside risk. The most this portfolio has ever been down is 11.5 or 12%.
Do you have this?
Only lasted for 2 weeks.
Who's your broker for this?
What do you mean?
Like, do you have this like as a personal, like, on the side? The reason why I'm asking, because one of the things that I've been trying to do is improve my Sharpe ratio. Do you guys know what a Sharpe? Well, you guys probably do know what a Sharpe ratio is, but basically a Sharpe ratio is, it's the amount of return that you get without having to sacrifice as much in terms of risk. So the thing is, what happens, it's like a risk adjusted reward. So if you have over a 1 in your Sharpe ratio, that typically means you're pretty good. Like that's a good way of generating income without taking as many risks. I looked at my Sharpe ratio in my portfolio for the last 3 years. It's like a 1.25. I'm kind of happy about it.
Yeah, I mean,
I have no idea.
I don't know what the Sharpe ratio on that is, but one of the ways that
we could go to it, Matt. Go to Fidelity and go to performance. But you know what? We can't, because it's you need to have it like at least 3 years for the account to be active in order to get the Sharpe ratio.
All I can tell you is that there are 98 positions in that account.
Jesus Christ, man.
98 positions. And a lot of them are ETFs and closed-end funds and business development corporations and REITs. I mean, I got everything in there. And that was part of my risk mitigation idea. And once again, it's not about capital appreciation. And I figure I got a long time until I retire. So if I keep doing that, that account on $100 a week, which is I don't feel it, is going to do pretty well. And it'll be one component of paying bills.
Yeah. Nice.
Love that. What was I saying? I guess that's it. Stephen, thank you. 195 people at one point chimed in to hear what Stephen Fiorillo had to say.
No.
But I do encourage people. Stephen writes an article. He puts out about at least 4 articles a week. Most of the time it's 5. So probably one of the hardest guys I know, and it's very generous of him to spend his time, because otherwise he'd be doing probably writing articles. But Stephen, very curious question for you. When alternative assets weekly?
After tax season.
Yeah, dude. I'm so scared of my taxes this year.
So shook at tax season right now. I mean, it is not good. And the worst part is the brokerage company that I use has 2, I guess, because due to how complicated some of the freaking tax forms are. I got some of the tax forms yesterday, but it says some of my other tax forms don't come out until 2/28. So I'm on pins and needles trying to figure out what the hell I'm going to owe the government.
I'm in the same boat, man. I got so many fucking K1s this year. It's like, oh, please, no. And I have to wait until all of them come out. So
yeah, you're going to be waiting until middle of March.
Yeah.
Jesus. Cool. All right, gentlemen. Any particular choice on the outro, Mr. Fiorillo?
I don't really care. I think it should be you playing a Shadow Priest.
Playing a Shadow Priest on World of Warcraft?
I don't know why you don't get in the game.
It's because I'm shook, Steven. It's a lifestyle. It's not a game.
I'll tell you who's not shook. Chris Patel is not shook.
Do you want to tell people why?
No. Don't tell because it's not anybody's business.
It's not anybody's business. That's not anybody's business.
Wait, what are you guys talking about?
We'll tell you after.
I'll tell you in the chat.
Okay.
Greed is good. The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good. Huge upside potential, upwards of $60,000.